It's my pleasure to welcome you to this tax and accounting event. So tax and accounting, as I was joking at the beginning of this session, is sometimes regarded as, as the boring topic, but it's actually one of the most important topics that is usually kind of underestimated by a project holder. And we thought it was interesting to discuss with the real specialists and to have the opportunity for you guys that are joining us right now, have the opportunity to ask a few questions and also certainly to get a few highlights. So again, the goal today is to speak during 1 hour. It's not like a very burdensome or cumbersome type of discussion. We just want to go right to the point. It's also right on point because this is a very practical topic, and it's really an end of the year topic because we'll need to finish the accounting year on the 31st of December. So it's a very a recurring but important topic. Before we go towards the question that you might have, I will just leave 1 minute to the two speakers to introduce themselves, who they are, what they do, so you know who you're talking to. We'll, of course, begin with Suzanne, who is currently in space. Jeff Bezos took that picture, right?
That's it.
So, Suzanne Morsfield from Lukka.
Thank you.
Please introduce yourself.
Yes, and I have you'll hear my blaring American accent, but I am actually based in London, not in space, but I liked the background. It's sort of the global nature of crypto, I suppose, was what I was thinking about. I'm the global head of accounting solutions for Lukka, and Lukka is a data and software company that serves primarily institutions, some of the biggest institutions you have heard of, and all different kinds, from miners to exchanges to hedge funds and fund administrators to corporates, that hold crypto on their balance sheet. We also do serve individuals, but that's you'll hear me talk from an institutional background primarily. I have a long background in accounting and tax reporting, and have even been a tax professor at university because somebody has to do that. But it was a long time ago that I did that. But I also served as a staff member at the International Accounting Standards Board, leading some projects there. So this is an area that, as Gabriel said, is not always a sexy topic, but I happen to love it. And I imagine my co-panelist Federico loves it as well. So thank you so much. I'm happy to join today.
So you understood top-notch speaker only. And then Federico. Federico, can you yourself?
Yes, with pleasure. So my name is Federico Abrar. I am an attorney at law in Geneva, Switzerland. I have been admitted to the bar in 2012 and got my lawyer license in 2014. Since then, I have been working in several law firms, and I held some positions as well at the tax administration, both at the cantonal and at the federal level in Switzerland. I launched my own law firm 1 year ago, a little more than that, like 15 months ago. And I'm a tax lawyer. This is my main field of practice, even though I do other things as well in the field of commercial law as well. My background is mainly legal, and I used to practice in the field of cryptos, or I have a lot of exposure to crypto issues since about 3 years ago. That's it.
Thanks a lot for this nice introduction. We already have a few questions, so I'll jump right in. So we have Eric Martinez Dorantes and Amy Marie Patricia Nisuilehabain. Sorry, I couldn't pronounce that right. In a few, and it's actually linked to the pre-conversation we had just before. So so they want to know, how do I determine the value of my digital asset for tax purposes? And Amy wants to know, she bought Bitcoin 80% and ETH 20% in 2016, probably never cashed out. It's actually linked to the first question that I wanted to ask you guys. Suzanne, you work with the institutional. How do we make those tax reporting? Can you give us like a quick
Sure.
101 crash course on
Sure.
what should we take into account? How do we value, those assets, etc.?
It's a great question. It's a great place to start. And I'll step back one or two steps and then make sure I cover it, and then also welcome thoughts from Federico as well. One of the things you sort of have to start with, and this is true everywhere in the world, and we Lukka helps companies and individuals to a lesser degree, but everywhere in the world. So the thing you have to step back and ask is, with especially with respect to tax, is what I am doing or holding taxable at year end? Yes or no? And then if it is, we always then have to ask what kind of item is it for taxation? And often it breaks down between something like, is it considered a piece of property? And so you'd have a capital gain or loss, or is it income, sort of what we call ordinary income coming in. So if you were paid in crypto, for instance, often that's an ordinary income, which has its own tax sort of standards and rules around it, versus if it's a piece of property being viewed as a piece of property by your local tax authorities, then it has often a different sort of set of tax rules associated with it. But so once you enter into the realm of, and what I did this tax year taxable or not, then we have to value it. And so one of the things that is often true is if you've just held it for the whole year, like you bought it, last year or even this year, you just held it in a wallet, whether you're an organization or an individual, often that is, as the value of it changes, for tax reasons, it doesn't necessarily imply a taxable event has occurred over the year. For accounting rules, that's a different story, but let's just stick with tax for now. And so, but if you're moving it around, that's when you enter into, or you're receiving it, and not just buying it, but let's say somebody's paying you your wages, then you have a taxable event, and then you have to value that. And one of the things Lukka does, for instance, and I'm not trying to sell our product, but we're an example of a kind of firm out there that can help with that, is it helps companies assess what's called the fair market value at the point in time that you part with or receive your crypto. And sometimes it's actually pretty easy. So, and sometimes it's complex. And so let me start with the easy thing, and then I'll pause and make sure Federico can chime in as well. The easy part is if I receive wages in let's say Bitcoin, then it's the amount of, the fair value on the day I received it is, that transaction, I'm paid, my wages in Bitcoin is just that amount. Or if I'm paying us for goods and services, and the goods and services are worth, 10,000 Swiss francs, then that's the value of your crypto sort of at that time. And so sometimes it's super easy, and other times you need to step back and have a software like Lukka that can literally sort of look at what's going on across all the exchanges, main exchanges, see what the prices are, see where what's going on with arbitraging and where the volume is in the exchanges. And then that helps determine where the price sort of goes. And that we can talk about in more detail. I don't want to sort of make everybody sort of glaze over, but there's often easy ways, but then there's often transactions a little more complex. And Federico, let you chime in too, or Gabriel, if you want to.
What 101 is really, if you have a legal person, so if you created a company, eventually it could be worth it if you're like a physical person who made a lot of money to create eventually a company, but you most certainly need the right tool to actually assess, handle, and have everything kind of encoded to actually present the tax reporting in a proper way to the authorities. That's what I got.
And that's important. That's a really important point, is that the tax authorities will want to know, where did you get that fair value, you know? And so it is wise, and I never, you know, want to say that I'm giving you formal tax or accounting advice, but I can tell you best practices are good ideas, and it's wise to sort of have a very good set of documentation, whether you're a company or an individual. Here's where I got this value from. Here's how I approached it, and here's the tool I used. And then that's just sort of kind of good wisdom out there. So,
Federico, so how would you? What advice would you usually give to someone who tell you, you know, this kind of typical situation of someone who was not really organized on a very professional way, let's say, maybe profit during the bull run or the bear market, because shocker, you can make money in both situations. You made a lot of money, you were not really organized, you just sold it off and got the huge pactole, how we say in French. You believe you're rich, but no, the tax authorities are around the corner. What do you say to someone who comes to you with such a use case?
Well, first of all, it's always too late afterwards to, you know, to think about what you do, what you have to do, or what you can do for past actions and past gains. So my first advice would be to go and seek for advice before starting to invest into crypto currencies, tokens, etc. Usually, you know, in my field of practice as an attorney at law, people come to see me afterwards, and we try. I mean, a topic that comes really often in my law firm is, you know, in Switzerland, capital gains are exempt from tax. And people who hold cryptocurrencies and sell those cryptocurrencies usually will realize a capital gain that hopefully will be free of tax. But of course, when when it comes to a huge profit, the tax administration won't agree with this interpretation. And in Switzerland, there is a way for the administration to convert, or let's say convert, but it's not the exact terminology, to convert this capital gain into something which is taxable. And what do they look? Well, they will look at the frequency of the operations. They will look if the people, the people involved, the taxpayer went or not into debt, and these kind of things. There are several criteria. And what's important to know is that those criteria are not, there are several, there are like 5 or 6, and only one of those criteria can be enough for the tax administration to consider you as an independent person with a gainful activity, and then your capital gain won't be tax exempt, but will be fully taxable at the tax rate of a person. The tax rate of natural person, namely, between 15, let's say, and 40% in Switzerland, which is a bad surprise. So in order to avoid this, what should be done, at least for someone who is thinking about investing a lot in cryptocurrencies, is to seek for advice beforehand. For professional advice, and of course, I'm not trying to sell anything here, but to look for professional advice beforehand in order to to get the things organized the way it should.
So it's possible in Switzerland at least, but is it like something common? The person I knew was, for example, domiciled in Dublin. So of course you're not an expert on foreign tax law, because that's how law is. You know, you're always only the expert on your local law. But is it something common? Is it something that it exists also in other jurisdictions, or is it really a Swiss specific to have this exemption?
No, this is a Swiss exemption, I guess. I've heard, I think, lately about other jurisdictions where this may occur, but no, really, it's something really, really Swiss. And so, as it's, it's an exemption, and all exemptions to taxes are really, interpreted in a restricted way. So it's important to, to prepare the work beforehand.
Okay, so
I think that
sorry,
I think
please.
it's such a wonderful, point to make, to sort of get advice beforehand, especially if you're going to be active at all, because that's in all countries, and it is, what I've seen across the countries that, of the institutions that we serve is that this is quite a unique thing to Switzerland, where there is this exemption from capital gains for individuals until you cross this threshold of being super active. Whereas let's say in the UK right now, you moving things even from wallet to wallet can create a taxable event. So it can happen quite quickly. So the advice beforehand is really smart, especially if you're going to be doing things, for lack of a better way to say it. And you don't just have sort of this buy and hold strategy, I suppose.
I believe it's a universal good advice, just to say be smart, think ahead. What I also keep in mind, and I have Martin Patron who asked, the concrete use case. So in Switzerland, if I buy 10 Bitcoin in 2017 at 1.5K, I sell it in 2021 at 69K's value. Do I owe a personal income tax on the benefit? So he says 54K. Yeah, but I mean, if it's 10 Bitcoin, he made 500K. The answer will be depends, I'm pretty sure, because it will depend on Martin. What is his profession, etc. But eventually, this exception might apply.
Yeah, so the exception might apply, or even should apply as a principle, depending, of course, if we're not talking here about a professional. Let's say it's a person here, Martin, could imagine that he has a business in another field, which has nothing to do with the financing world, etc. And he invests money into the crypto market, then it should be, as a principle, considered as a capital gain, exempt from tax. But as the amount here is huge, as I said before, just because of the importance of the amount, the tax administration might consider that the exception here is met, and of course. There are conditions to this, but the tax administration, where I used to work, they are really, creative when it comes to, the application of those different conditions. So,
I would like simply to, because Rick Grossman wants to have, for example, more details about that. Can you give the threshold water? So what Federico is saying is basically it's an administration. So basically they have power of life and death over, the tax admin and the person they administer.
Okay.
Give us like a few key points that helps us pinpoint exactly, if I might fall in or out. So please.
Okay, so we have in Switzerland a regulation which is it's not a regulation formally. It's a circular. It's something from a legal point of view is not as formal as a law. But let's say a regulation that is pretty comfortable for people who do not make much trading with their shares, cryptocurrencies and stuff. And if they do not meet some thresholds, for instance, they do not sell or buy and sell within a framework of 6 months, they can be pretty sure that they won't be considered as professionals and they won't be taxed on capital gains. But most of the people, 99% of the people who invest in markets, they won't meet the condition of this circular. And when the conditions of this circular are not met, then is only case by case. And the threshold, there is no threshold. I cannot say, 50K, you will be tax exempt, and 100K, you won't be. there are criterias, and I have the criterias here. They're written in French, so excuse me for the bad translation. But I mean, mainly what they're going to look is the systematic character of your activity, the fact that you held your cryptocurrencies not for a long time, but you made, you know, some of a trading business. They will look at the link between your professional activity and the trading. They will look at the, as I said before, if you went into debt or not. And they will look at you know, the investment, what you do with the capital gain. Do you reinvest the capital gain, or do you keep it you know, in a safe bank account? That's it. And as I said before, one condition is enough to consider that you're a professional, and this is why, you know, the condition is this analysis is pretty hard.
So I would like simply to wrap up a little bit those questions and come back also with a question for Suzanne. But long story short, does it make sense once you've done imagine you're not a professional, you made a lot of money because you had NFTs or any type of other tokens. Note that NFT can be kind of a sub case because sometimes it can be considered art, etc. But we'll not enter into that. Imagine you made a lot of money once because you invested at the right time at the right place. Is it worth it, you know, even if to create a company or to organize yourself under the umbrella of a legal person and eventually use, you know, the Lukka system, for example, for accounting and get more professional? Or is it, because as I understand the correct, if I'm correct, it's kind of a, even if it worked, it's kind of a one-time exception. You know, this could it work like every year for like 10 years? Can I make like 200K? Like it depends.
Yeah, it really depends. You know, you can it's not even a one time exception for application. I had the case, of course, not in the cryptocurrency world, of a person who had a collection of red wine bottles in his cave for like 20 years, and he sold its collection for I don't remember the numbers, but it was something important. It was a one-time operation, and the tax administration considered that it was a taxable event. So then he challenged this decision. But, well, you know, you never know. You never know. It's kind of complicated.
Suzanne, I wonder if I could just point out one quick thing, and then happy to follow up on your question too. Is that if and this can become relevant right now, when if you do fall into that exception for capital gain where you don't have to pay tax on it, the converse is also applicable, where if you have a capital loss, if you lose and you fit into that exception, you don't get the deduction for that. You don't get the benefit of the loss. So if it's something to keep in mind, is that both, it's parallel. So if you fit into, you don't get taxed, well, guess what? You also don't get the benefit of a deduction if you fall into that. And it's just something to make sure we touch on before we move on, I think.
Yeah. Yes, I do agree, but what is dramatic is that, you know, tax administration in Switzerland at least could consider that you're a professional, you know, during year one, and they can potentially change their mind 3 years later and pretend that you're not a professional anymore, so that if you occur losses, you cannot deduct them. This is really something that could happen, not frequently, but this is a scenario that one cannot avoid.
This is the recurring problem of having, you know, authorities that are in the end, you know, the final judge kind of the decision, even though you can technically, you know, have a recourse at the tribunal, you know, you still have those authorities that can decide on how they want to interpret the law. Suzanne, I wanted to ask you, because some of the questions that we have in the chat discussed this point. So basically people wanted to know, how do we consider from an accounting point of view cryptocurrencies or tokens in general? Can you give maybe
Yes, yeah, sure.
A few different situations? If I have a Bitcoin, if I have like a security token, how do I do it? What do I present to the authorities? How does it work?
So this is a fascinating thing that is often surprising to folks and I've had to talk about it in the U.S. as well, because our U.S. Congress is contemplating, treating some, ETH and Bitcoin as a commodity and calling it formally it's a commodity. And that can happen with regulators around the world, whether it's, the FSB talking or the Swiss authorities talking and saying, for our legal status purposes as a regulator, here's different kinds of categories that they fall into. And here's the hitch with that, or the hiccup, is that the accounting rule makers don't care what the legal authorities or regulators call it. So and they could call it a blueberry, like a fruit, and the accounting authorities will say, under our rules and definitions, here's what it is. And often people don't realize that those things aren't joined up. There's not joined up thinking there. The accounting standard setters, whether it's the US ones or the international ones, and often the local GAAP, ones, the Swiss local GAAP, have their own definitions. So what you see right now is many or most of them are treated as a intangible asset, and an intangible asset with an indefinite life. It's a very specific kind of intangible asset. Or if you are in that position of you're trading regularly, you can call it inventory or a financial instrument. But it literally, you have to go to the accounting rules and you have to see where this goes back to your particular activities, kind of land you. It's sort of a combination of how you're using the crypto and what kind of company you are, if you're a company, and then you find the appropriate definition. And so if you're in a company that is actively trading, an investment company, then you can either have it fall under financial instrument accounting or inventory accounting. If you are, the world's biggest holder of Bitcoin is an American company called MicroStrategy, and they make software. And so for them, their holdings of Bitcoin are this specific type of intangible asset. And that's true under US GAAP or IFRS. And then I can talk more about the accounting rules that fall, sort of the reporting that falls out.
There are some international standards.
There is.
We still have already a few things.
Yeah.
But maybe Federico, can you also explain from a Swiss point of view how can we consider, for example, Bitcoin? I know that Bitcoin might be considered, sometimes as a. Can we hold an accounting only using Bitcoin, or do we still need to use a Swiss franc by the end of the year? Can we? How do we translate like a Bitcoin wallet into the accounting, and what does it mean, from a tax perspective by the end of the year? How does it work?
Well, in Switzerland, the accountability must be held in Swiss francs, or at least you have to, you have to make the translation. So there is a list, an official list in the website, in the tax administration website of the main cryptocurrencies, and you have to work with this list with regards to the main ones, and for the others, you have to go on a platform and make the change yourself. But you have to work with Swiss francs. Yeah.
Okay. And if I have like 10 Bitcoins with two different use, for example, I use the 10 Bitcoins as my treasury for the companies. This is like use case one. I use it to pay, like I exchange it to fiat to pay like a service provider or just a blockchain transaction or other stuff. This is use case one, and the use case two, I'm the investor. I created a company. I bought like it's the micro strategy type of thing. It's an investment that I will hold for like 10 years because I believe in the cryptocurrency as an investment. How do you treat it from a tax and accounting point of view? Maybe Suzanne, maybe Federico, if you want to.
Suzanne, I guess.
Like I'll start with the accounting because that one's the fun. That's fun. I mean, it's not fun without using good software tools. But because we do that, help do that for you. But if you're an investment company, you do what's called mark to market. So you mark to the fair market value, and with your accounting advisor, your auditor, it can be daily. It's called striking NAV for hedge funds. It's what they do with equities holdings. And it's a similar concept for crypto where you have to market every day. If you're a company, like, let's say, go back to MicroStrategy or a Swiss equivalent of that, where you're a manufacturer, but you hold Bitcoin in your treasury, as you said, or maybe decide to buy services with it. It is intangible asset accounting, and it means you have to go through a formal process of testing to see if it's impaired, and you do that on a regular basis, and you usually need tools to help you do that, and you mark it down, and you can only mark if it recovers under IFRS. You can only mark it up to the original cost, whereas if you're an investment company, if Bitcoin goes way back up above what you paid for it, you get that new value showing on your financials, on your balance sheet. But if you're a different kind of company, let's say like a software company or automotive company like Tesla holding it, you're using IFRS, you can recover it, but it's with a cap at the original price. So it's two very different financial reporting results depending on what kind of company you are. And that is a complaint that many people have about the current state of accounting rules, is that you get completely different results just based on the kind of company that you are. And in the US, they're trying to change that. In the international accounting standards, they aren't looking to change that yet. I think they're going to watch and see how that works in the US.
Is there a way to make some accounting arbitrage, some regulatory arbitrage, and go towards a jurisdiction where it would be easier,
Yeah.
Is there like a most favorable nation with regard to, I don't know, tax and accounting?
I do think there is regulatory arbitrage, and that's going to continue. That's happening now, whether it's accounting or tax approaches. The one thing I would note though about that is that, especially with tax, there is tax arbitrage that goes on even outside of crypto, right? Companies many times structure transactions, structure approaches using entities, in tax favorable places, or using tax structures in other places other than where the company is domiciled. And so tax arbitrage is a thing that happens regardless of crypto. So I always like to point that out, that companies do that now, and as long as you're doing it within the regulations, that can be a good thing and an okay thing to do, as long as you're not avoiding or evading taxes. When I was a tax professor, I would teach, there's a difference between evading taxes and breaking the law, and structuring things in a way that is the most beneficial for you as an individual or as a company.
Maybe Federico, do you have something to add up? How can I make sure that, for example, I have a current business model with regard to, blockchain technologies as of now. I want to make sure with the tax authorities that in 1 year time, my situation will be considered in a certain way. Is there some method to ensure that the tax authorities, can you defend, that, for example, the 10 Bitcoin that sits in my accounting will be considered as, an investment under Swiss law? Is there some way to request some ruling from the authorities?
Well, when it comes to the commercial accounting, well, I won't go into details because it's not my field, but from a tax perspective as well, at least the cryptocurrencies in the balance sheet will be recorded at their acquisition value. Usually there is Suzanne, just tell me if I'm saying something wrong, but you cannot I mean it's a maximum, it's like a maximum, and you can only do some amortization. So the depreciation, I'm not sure if the word is correct in English, but it's it can only go lower and not higher. It's only in the hypothesis of a sale that's a benefit, corresponding to the difference between the book value and to the fair market value will be taken into consideration. So when it comes to commercial companies, I'm not sure that there is a need for companies to go and seek for a ruling, of the tax authorities. When it comes to individuals, it's different because of course, every year, I am not talking about the income tax, but about the wealth tax, because there is no income, as you said before, Suzanne, if there is no tax event, if there is no realization. But when it comes to the wealth tax at the end of the year, you will have to declare it at a certain value. As I said before, there is an official list on the website of the tax administration, but there are other ways to come to to declare, to report this value. And well, the rates, the tax rates for wealth tax is not high. In Switzerland is about, well, Geneva is like the highest one is around 1%. But let's say that well, it's 1% out to 500K or more. It can be yes, significant. And there is maybe a way to have a discussion with tax authorities beforehand in order to try to limit and to declare. But this is something I'm really not sure of, and to try to declare those cryptocurrencies as commercial wealth, which is something feasible for shares, but it's not. I'm not sure it's feasible for tokens. So this is maybe a way, and it also should be noted that for shares, when it comes to regular shares of companies, when you declare those shares into the commercial wealth, when you try to do it, the tax administration will here again see if you got into debt or not to buy those shares. And here, if you want to declare them as a commercial wealth, the tax administration will ask for debt. If there is no debt, then you cannot declare them as a commercial wealth, but they have to be kept in the private wealth, and private wealth is submitted to the rules I just said before. So fair market value.
So sure, please, Suzanne, go on.
One of the things that I just was dawning me to also draw out for folks is that there is the tax approach each year, if you're a commercial entity or and then there's the accounting rules approach. And so we see this a lot globally, where the tax is, you put it on your tax balance sheet at cost, and you wait till you sell it, and you get the selling price at that time, and that delta may be taxable depending on whether you meet the criteria or not. But that for tax, it's often quite easy because it just stays fixed. Yeah, I bought it at X and I sell it at Y, and that delta tells me sort of the gain or the loss, and then there's potential tax ramifications there. For the accountancy side of the story, both in the US and under the international accounting rules, you have this fluctuation, and how it fluctuates, whether it can only fluctuate down Federico mentioned, or whether it can fluctuate up and down, this mark-to-market approach, the accounting rules mean that your balance sheet for accounting will look different than your balance sheet for tax.
We have
Almost all of the time. And so that is why it can be helpful to have a tool as well there to help keep track of that, if you will.
We have kind of a question that goes in exactly in the way
Okay.
we were speaking. Someone asked, what are the tax benefit of holding a Bitcoin future contract, meaning so basically a securities in its accounting versus owning directly Bitcoin? Would it be very different? So it will be two different tax reports, as I understand. And would it be one would be better than the other? From of course, we have to so the first preamble to this question is that we know which law would be applicable. Imagine, can you give me like a 1-minute answer? And because there are like tons of interesting questions, so I would like to give you a chance. So basically, would it be very different? What would you recommend? And do you have like a significant tax advantage in having a Bitcoin future contract, meaning a securities, or Bitcoin directly on your accounting?
Well, I will give a short answer, and I'm not sure about my answer, but the valuation method is not the same when it comes to I mean, when we're talking about a token from one side, and when we are assessing the value of shares, and you have maybe a little more of control on the valuation of the shares of a company. But in Switzerland, the method which is used by the tax administration in order to evaluate the shares you hold in a company, which is a private company, is not it's not really appreciated by the public. So there are two different methods, but without a concrete case, it's kind of hard to say what method will be better in each case. But this is I'm not really sure about my answer. I'm sorry.
May I please, Suzanne, maybe do you have a 1 minute because I want maybe to add up to this.
Sure. I mean, mine would be more on the accountancy side of things, that there is real differences in the accounting treatment. So if, for instance, I'll go back to my MicroStrategy or Tesla example, just because that helps people can really see, like, that's a car manufacturer that's holding Bitcoin. And if they decide to, and it's this intangible asset whose value can only go down and never come back up in terms of how it looks on their balance sheet until they sell it. If they held a futures contract, that goes, so if it's Bitcoin futures, they get to go with the market. So it can go down, but it can also come back up. And so that ends up being potentially attractive for companies that are thinking about how it appears on their balance sheet. So, and that they can recover if things go back up. If it's a derivatives contract, you get derivatives accounting treatment if it's a futures, contract, and you don't otherwise.
One of the interesting points that someone mentioned to me once is that if you imagine you buy a Bitcoin at $1,000, then the Bitcoin, goes towards like 20K. Imagine if you counted your Bitcoin at 1K, during the year, because you had a huge fluctuation, and you bought for 0.3 worth of Bitcoin, let's say 0.5. And you bought a service for 10K. Your Bitcoin is still valued at 1K, meaning it's valued at 500 Swiss franc, imagine. But still, you acquired like something worth 10K. And from an accounting and tax point of view, you have like some kind of a balance that, and it might work in your favor depending on whether you're an individual or whether you're a professional. And we had like Carmen asking this question, when it is worth it to open a company, and Federico, you already kind of answered this question, but maybe can you give maybe an idea of when do you think it would be worth it opening a company versus being like some kind of a individual trader? Is there like some kind of a threshold, some kind of a that you could? I know it's a
No,
hard question that there is.
yeah, no, definitely. Yeah, definitely no threshold. I mean, it won't be a good answer to say that there is a threshold. But for me, what's important is maybe what are you doing with this company? I mean, do you have some control, or is it just a holding company or something like that, or is it a commercial company with some concrete activity? Yeah, and then when it comes to companies, you have a lot more questions that will arise. I don't know where Carmen is located, for instance, if she's abroad or not, but you have some other taxes to take into account. For instance, the withholding tax, and well, the withholding tax is not something that is really, appreciated once again by the public, and there is not much you can do against this withholding tax when you're located abroad. It's 35% of tax, and then you have to rely on a double taxation treaty, and to make sure that this double taxation treaty has a rule which would be in your favor in this precise case, meaning that, for instance, Switzerland cannot tax more than, let's say, 10% or something like this. But it's still 10%. And if you hold directly, or if an individual hold directly cryptocurrencies abroad, maybe that this tax disadvantage won't apply. Yes, thank you.
But that's also one of the key points that people tends to disregard, the regulation, etc. But knowing the rules helps you actually make money by the end of the day, because you can be more efficient and because you can also optimize everything. I'll switch towards other question, because we have tons of questions here. So one of the questions that retained my attention is Jack's question with regard to, he was wondering, it's kind of an open question, and I would like to ask it to Suzanne. Do you think technology is some kind of a revolution of the accounting industry? We have this triple entry accounting, we all heard of it, credit, debit, trust. Do you think it will revolutionize? Because in the end, the authority still wants to have the tax reporting being handled normally, credit, debit. So what do you think of it? Can you give me
it's a wonderful question, and I do hold out hope that the accounting side will evolve to that. And this is just my personal opinion. I'd love to see it move forward, and I'd love to see it get revolutionized by the technology that's now available, and more. So I see, again, just my personal opinion, one of the things that since I've been a professor, I've had the chance to explain to students is that taxes really often serve very different purposes in the accounting, and so governments use them to raise money for the government's treasury to offer good services to all of us and to operate the government. But often they're used to reward or penalize individual behavior or corporate behavior. So when you think about something like a research and development tax credit that may be available in certain countries or certain parts of countries, it is to reward, to encourage innovation or spending on R&D. In the States, we're famous for taxing Coca-Cola and sugary drinks, because we're trying to, somebody somewhere decided that would be a way to get people to, stop drinking too much sugary drinks. And so taxes have this whole separate kind of purpose in a society, and the recording of them, I think, is often driven by that. And I suspect they may be slower to evolve for that reason, but that's just my opinion, and I'm not sure if Federico agrees with me or not, and or you do. So
I do.
Finally, Federico said I do. I have another interesting question that I would like to discuss with you guys. So it's more for Federico, this one. As an individual who has invested 20, 30K in 2020, with no significant activities since. How do I report for tax in Switzerland for 2022? So basically, someone has invested, eventually he has made a benefit. What if he has made a benefit? What if he didn't get the benefit? And basically, where does he get the rules that explains it all? It's kind of basic questions. So the tax rule view is basically the law. Do you want to give like a few highlights on this on those questions? So
yes, so depends, of course, of where what happened with the first investment, made in 2020 to 2021. If the investment has been sold, well, and the person got cash. Well, the cash, which then is wired into a bank account, must be simply declared as wealth in the tax declaration. So it's nothing.
Personal declaration.
And if there is if this person is still holding the cryptocurrencies that were bought 2 years ago, well, the rule that I told before will apply here. So it is necessary to go to the Federal Tax Administration website to check whether the cryptocurrency is or not on the list. If it's on the list, well, it's a simple, calculation that you have to do. You report it into, you declare it the Swiss franc value, and if it does not appear in this list, then simply go to a platform and make the change yourself, and that's it, I think.
So you have to declare in your personal declaration, in your personal report.
Yes.
I had 10 Bitcoins, I sold them, and it might eventually fall in this exception that we discussed prior to that. So eventually,
this is the capital gain. Yes, this is the capital gain. But in the absence of capital gain, and if this person still holds cryptocurrencies in his crypto wallet, then he has to declare it in a special. I mean, there is no, at least in Geneva and in other neighbor cantons, there is no specific place to mention the cryptocurrencies. There are two main trends. Some cantons say that you have to declare it exactly the same way you would do for a bank account. So you have to click on the banking account bar, and you declare the value in Swiss francs. And the other possibility is to, well, it's kind of in the same part of the tax declaration. You have to declare your cryptocurrencies in the share part. So it's like you have shares in a random company. Well, instead of declaring shares, you will declare the cryptocurrencies you have. And I have no preference for one or for the other. The big difference is that when it comes to shares, you can also insert the gains and losses that you have done during the year, which is something you cannot do for banking accounts. For bank accounts, you can only state the value at December 31st.
We have 8 more minutes, and I would like to ask you 2 more questions that I found are interesting. One from Martin Patronk. He's an NFT artist selling NFT against ETH, and he's asking what will be his tax situation. I believe it's also interesting to note here and to open the discussion towards the VAT. So because we mostly discuss income tax, be it for company or for individual, but just bear in mind that there are like other potential tax that might apply. So it depends on the applicable law, it depends on the qualification of the token, and it depends also eventually on potential exception. So what would you say to an NFT artist selling NFTs against ETH? What is in a few words, the tax situation, would it be worth it, staying as an artist, opening what we call a RI, raison individuelle, basically a type of company where it's a personal type of corporation where you don't create a new legal entity? Is it worth it? Or what should the person in those situations do?
I don't know, Suzanne, if you want to answer first, and then I.
Yeah, I could. I feel like I have, it's one of those things where you have questions to ask, and sort of, so I'll throw out some questions that maybe kind of might help. Is, in some parts of the world, they think about whether what you're doing is truly a business. And so I guess you're asking the question, Gabriel, should he open a business or her, or a hobby, and you get different tax treatments depending on that. And then sort of what is it that you're in quote selling? And with NFTs, one of the things many of us have really seen and learned is that, are you selling outright the ownership of this whole piece of tokenized art, and that becomes that other person's forever to use how they'd like, to dispose of how they'd like, if they want to sell it on? Or are you essentially doing a licensing arrangement where they get to use it to display it, but it's the whole art is not theirs, just an aspect of it, displaying it, or they get to license it for a period of time? And so some of those questions come to mind, and I don't know if that helps sort of tee things up and hand it back to you, Federico, a little bit, that I sort of had questions that I wondered about.
Should I add the VAT, for example? Yeah. Just simple question. Should I add VAT when I sell an NFT? I sell an NFT for 100. Should I add like a 7.7%?
Normally, well, if you consider NFT as a work, an electronic work of art, it should be out of the scope of the VAT Act in Switzerland, so that VAT shouldn't be due. But this is typically something, especially for an artist, which I imagine is generating NFTs all day long. It's something that should be, just answered by the Federal Tax Administration, responsible for the VAT. Yes, it could be a tax ruling, which is really comfortable because the tax ruling for the taxpayer is binding for the tax administration, so that when they give you the permission, well, not the permission, but when they validate a tax transaction, that they cannot go, or they shouldn't go, at least against their own advice given a couple of years before. But you can also just, take your phone and they're really quick at the federal tax level. You can ask just a question, and if they have, a direct answer, then you can rely on this answer. It's not binding, so it's much less comfortable, but at least you don't have to hire for a lawyer to get the answer. Is not, of course, what I would recommend, because first of all, it's against my own interest, but of course, well, it's something that can be done both ways. Yeah.
But it's important to see the problem ahead. And again, I believe that's what you highlight. You look it up. You just make sure that, for example, with a tax lawyer, you just take 1 or 2 hours just to figure out if there is like some potential problem with your use case. And eventually you try to solve it ahead, because, crypto, it's a gray area. So you have to make sure that you do things properly. Otherwise, you might have down the line problems being with the accounting or with the tax authorities, tax ruling, asking the questions. Especially in Switzerland, we have competent authorities, I believe, that are able to answer and upon which you can rely. You wanted to add something more, Suzanne, Federico? Otherwise, I'll have 1 minute to ask the last question, which is a complicated one, before we just wrap up this event. So basically, we have Manuel Stoll. He asked a complicated question. They're creating a DAO association in Liechtenstein. The DAO will issue tokens for the token of the ecosystem. The question of Manuel is how those those tokens once they are sold. So the association will sell tokens against USDT. How do those USDT will be considered from an accounting point of view, and do these tokens need to be recognized on the balance sheet? If so, how? Long-term asset, equity, liability, etc. Before you answer, I would just like to say that nothing, of course, in this session is personal advice. I think it's interesting that we have some personal use case. One of the point also that is interesting here is that I believe you should be very careful. So it's an association under Liechtenstein, so we don't have any person really competent under Liechtenstein law. Knowing that, also having an association are necessarily not for profit. So I'm not even sure that depending on exactly what you want to do, your model is valid from the beginning. Knowing that, let's only focus on the accounting and tax point of view. You sell tokens with your vehicle. You have a 100K token, you sell it again USDT. How is this considered from an accounting and tax point of view? Apparently,
I mean, on the accounting side, there's a few things to think about, a few sort of these kind of follow-up sort of questions, and it is what rights or not come with the token, and that really will put you on a continuum within the accounting rules, at least, of where you end up. If it's almost like equity rights, so that it becomes literally almost a sort of almost like share ownership in a sense. So it's almost like equity. Right now, most of the accounting rules consensus, and there's a lot of thinking going on still around DAOs in particular, and what sort of wrapper they're in, and are they in a wrapper, are they a not-for-profit, are they wrapped in a limited liability company or some other sort of formal structure that ends up also being part of the story. But is what is the person who or entity that buys those tokens, what do they get in exchange? And so often you will end up in a financial instrument sort of accounting. So perhaps IFRS 9, if you're in the IFRS world in the US, you can end up in, I think it's 305. I'm trying to remember which part of the code, but you end up sort of with a financial instrument of some sort, rather than that thing called the intangible asset. So that's that thing a lot of people really like to avoid being on the balance sheet. The USDT, again, right now is looking like, so some stable coins are allowed to be treated as a financial asset or financial instrument if they're truly pegged to something where you're guaranteed one-for-one fiat back, and it's a contractual true, not just an algorithmic pegging to some mixture basket of things, but you literally will get fiat one-to-one. You can end up with it showing it as a financial asset on the balance sheet. That otherwise, if it's a different stable coin that maybe is more algorithmic, it still becomes this intangible asset that has to be impaired. I'm sorry, I'll pause there because I'm.
Federico?
Well, as you told before, Gabriel, I am not a specialist in Liechtenstein tax law, but if I try to assess the case from a Swiss tax law point of view, well, the question is kind of hard to answer because I thought it was the first question that we're going to be asked today, is how finally eventually the cryptocurrencies are treated in this country. And the first thing you have to do, as Suzanne said before, is that you have to classify the tokens, and you have to use the classification, the official classification of the Federal Tax Administration, not your own one.
Imagine it's a utility token.
Yes, so if it's utility token, I have a table here with like 40 different boxes, and every box is for every for every crypto, for every token you can have. So you said utility token.
Yeah, imagine it's a utility token. It is a utility token.
Yeah, so it will be definitely a benefit for the company issuing the token. But if it was, for instance, what they compare to bonds, foreign capital tokens, it won't be considered as a benefit, as a profit for the company, so that
But
no
it's an association.
income tax. Yeah, it's an association, right? But associations in Switzerland pay taxes on profits unless they are tax exempt, which is another issue and is not really applicable in the field of the cryptocurrencies. But even though it could be possible.
So I believe, you know, so in the question, the Manuel was asking whether we could consider, you know, the 100K of the 100,000 token he sold against $100,000 US, whether it could be considered as equity. So no, because they don't have equity. It's really not how it works.
Oh,
and there's
clearly,
like really a confusion between association and DAO, because and a DAO it could be an entity, a legal entity in itself. And we have a very interesting use case happening in the US. I believe, Suzanne, you know all about it, about this DAO association, basically that was pinged by the CFTC, OOKI DAO, which will probably create a precedent. So we have to bear in mind that, you know, that's why you really need to have also specialists at hand to discuss, you know, whether you create like the right legal vehicle, knowing that DAO and association are actually two different things. In this use case, what I believe it's also interesting is, as you mentioned, if you have a utility token and the association is selling 100,000 utility token, you might be in the same situation as a situation that we're selling a good. It's simply that this good is actually digital. So totally. You have to add the VAT. You have to, you know, take that into account. And as you, Federico, you were rightfully mentioning, probably it's an income. Yeah. Of course, not a legal advice. Otherwise, you know, guys, we discussed tons of also other interesting stuff during our preamble. I believe it would be interesting to have maybe in the future another session. Suzanne also proposed like a very interesting question that I wanted to discuss, but unfortunately or fortunately for us, we had so many questions from the public, from you guys. So I'm very happy that we had this awesome public that joined us this evening. You feel free also to reach out to the speakers. I would just like to thank them a lot for like their time, their know-how, and taking also the time to answer also all those questions and sharing it with us tonight. Of course, I would like to also thank our awesome Nikki Kshani for organizing the event, taking care of everything. And without further ado, I would love to say a good evening to all of you, and we'll see each other around probably next fiscal year, next tax year.
Great. Thanks so much.
Thanks a lot.
Thanks so much. Thanks a lot. Goodbye.
Bye, everyone.
We stay in touch.
Thank you.
Bye-bye, guys.
Thank you all of you. Goodbye. Bye.